guys, welcome. It's nice to have all of you here. Happy Mondays to everyone. I hope everyone had a great weekend. And as we sort of get into this week, we can basically talk about technicals that we talked about earlier on, with where the crypto market is. Simon, could you currently tell the folks here what's the current market cap on the crypto markets right now?
So the total market cap,
Yeah.
altogether, the total crypto market cap is 1.6 trillion.
Wow, we've basically halved in the past, you can say 3 months, right? Like we used to be up at 3 trillion market cap, I believe 3 trillion when Bitcoin was at above 60K, and currently we are 1.6 trillion. So like when you look into things like that, you realize how new the market is. I mean, you have the NASDAQ and the Dow Jones that's worth like 5 times that, right? Or you have the stock market that's worth 20 times that. Or you have the estate sort of market, the real estate market around the world worth hundreds of trillions. So this is how young cryptocurrencies is. So when we have sort of a snowball effect of interest rate hikes and other things, they sort of have a direct impact on riskier assets right now, and cryptocurrencies right now is classified as a risky asset. So that's why you're seeing the terms you are. So we're going to start off with this article here from Business Standards. It reads out, cryptocurrencies in free fall after big Fed rate hike in 2 decades. On Sunday, Bitcoin was hovering around 34.4K, and Ethereum, which is the second largest cryptocurrency, plunged to 2,545. So this article came out a day ago, and now we can kind of say that it's dipped even deeper, right? Ethereum's worth touched 2,400. Bitcoin touched 30K. So what's causing this thing? So let's look deeper into this article here. So it goes here. Bitcoin on Sunday witnessed another round of free fall, slipping from 35K as the global crypto market went a massive slump over 4.5%. So right here it says it went down to $1.6 trillion, right? So why is this happening? The reason this is like one of the main reasons. I mean, this is not just happening with cryptocurrencies. This is also happening with many different asset classes. So if you can see on the left of me, this is the Bitcoin chart, right? We can look at the daily here. So we see a dip here. We see the dip in Ethereum, right? And then we also see the dip in more, you can say, centralized assets like your gold, right? Gold just went through a dip. And then you can look into the Dow, the NASDAQ. The NASDAQ's also, as you can see, been sold off. So what's the reason why these things are happening? Why is there such dips in the market? So we can kind of look into this article here. So this article here, a crypto called 3 Possible Reasons for Bitcoin's 6K Weekly Crash. We can see that there's different things that we can kind of look into. We can look into articles. We can also look into a few different tweets. My favorite sort of Twitter handle to follow is Altcoin Daily. Nothing beats Altcoin Daily. So he posts out, why is Bitcoin going down? So it goes runaway inflation, right? Inflation going up 0.5%, the highest it's ever been in the last 2 decades. War in Europe, right? So we still have the Russia-Ukraine war going on. Parabolic DXY. Now this is something I want to kind of show you guys what this means basically. So what happens is when interest hikes happen and basically borrowing gets cut, it strengthens the dollar, right? The dollar index goes to strength to strength. All right, so if we see in the past few months, the dollar has gone from your 90, 89 to 90 region all the way up to 104, and it's a solid sort of bullish climb, right, with the dollar index. So whenever we see a strong dollar index, this seems to have a diverged correlation with with things like BTC, right? Things like the NASDAQ and things like gold. And these are the sort of asset classes that we trade. This is why we do a lot of technicals, to make sure you guys know these levels of the market. So we'll continue reading this tweet here. So it goes, yeah, so parabolic DXY, the dollar index, raising interest rates, right? Interest rates going up. S&P and NASDAQ put in new lows, right? This is the lowest the NASDAQ has been in a while. The macroeconomic environment is risk off. Bitcoin and crypto is a risk on asset class, right? So what they mean is like people are sort of hedging into assets that are like less riskier. And when people sort of go into assets like these, they take their profits. They sell off their contracts on Bitcoin and cryptos. So it goes here, whales in control short term. So that's the sort of layer that Altcoin Daily sort of subscribes to. He goes, it's a bunch of different things, and the truth is, so do these articles here. This article here talks about the raise in interest rates by 0.5%. Laid out plans to begin hiking interest rates, fall by 40%. So Bitcoin price has fallen over 40%. Bitcoin finished the month April down by 17%. So we've seen we've seen a lot of asset classes basically take a tumble, and this has basically put a bit of fear. So if we look into the fear and greed index, right, where are we right now in the fear and greed index, right? If we look into this, we are in the extreme fear zone. So everyone is sort of either holding on to their assets or selling off. But everyone is in fear right now. It's a different environment to be in, and especially with the sort of shorts that we've seen on Bitcoin that's happened this last weekend, we can see we are in extreme fear. There is a seller market right now. Now our duty at Crypto Cobras, or as sort of a servant to DeFi, is to basically tell you tell you why it's important to basically hold on to these cryptos. Because a lot of you folks are basically selling, and I get DM'd this week has been one of those weeks where I've been DM'd about 100 times, asking what's the current market climb? Why is my Ethereum account down? Why are we down 5x on our altcoins? So what I would sort of suggest there is to just hold. This is a moment to hold, and look at the bigger picture. Right now, we're looking way too micro into the sort of the plunges in alts. We're looking pretty micro in where Bitcoin price is. So Lark Davis put this tweet out, which I sort of resonate with. So he goes here: keep your eyes on the prize. Over 3 billion users coming to crypto by the end of the decade. If we compare it to the internet, we are in the late 90s right now for Bitcoin adoption. So if you can see this chart here, in fact, I'll send this to you guys in a Cobra voice chat. But if you can see here, this is a chart of the early 90s and how the internet was adopted. So we are in sort of this region here when it comes to cryptocurrencies, and when you have mass adoption, right? That's when you had the sort of Facebook boom, the Amazon boom, and you had like hundreds of millions first join, and then you had a few billion that started using social media platforms and using Web 2.0 faculties. But we're in the same sort of phase. We're in the early phase here with cryptocurrencies, and one thing you're not told about is things like Google, things like Microsoft. These sort of asset classes were actually short squeezed throughout the early 90s and even late, you can say late early 2000s, due to their sort of risk on, risk off fluctuations, and these things would have 50%, 60%, and then you would see them sort of 100x over the next 5-6 years. So we're early in the market, and when you're early, when there's a new technology, expect that sort of, you can say, resistance at these levels. So yeah, so that's the sort of adoption curve here. So the technology adoption curve is something that we should honestly look into. So I'm gonna pass you guys this link here so you guys can see this chart. But I hope everyone's kind of seeing the bigger picture now, because it's important to always keep your eyes on the bigger picture. Never sell at these prices. Unless you're leverage trading and you're shorting, then it's different. But if you are holding onto tokens and you're down, this is the time when you have to hodl. So keep your eyes on the prize. Over 3 billion users come into crypto by the end of the decade, right? Now the next thing I want to look into is some adoption that's happening. So if any of you use Instagram, you would have got a small update. If not, I'm going to give you guys that update now. So here reads out Meta's Instagram to support NFTs from Ethereum, Polygon, Solana, and Flow. Right, so Instagram, soon enough we're going to be trading off NFTs on the marketplace on Instagram. Pretty cool. So it goes, the social media powerhouse won't charge users for showcasing their crypto art. Right, so non-fungible tokens for some of the most popular blockchain networks for crypto art are coming to Instagram, with the announcement of a pilot as soon as Monday. The social media powerhouse owned by Meta is planning NFT integration for Ethereum, Polygon, Solana, and Flow. CoinDesk has learned those networks host the vast majority of trading in digital collectibles, with Ethereum and its Bored Ape leading the way by market cap. The pilot will feature a small group of NFT I can't say this word, based in the US. It wasn't immediately clear whether Instagram should support NFTs from all 4 chains at launch. So yeah, so we're seeing basically a big win for Ethereum mainnet for layer 2 here, because a big sort of Web 2.0, you can say, platform like Instagram is going to be adapting. So let's quickly look at Instagram total users. Total users, right? So according to this stat here, just in the UK, I want to know users globally, worldwide, because this is the sort of adoption that can take us places. I can't get the full number, but it's in the hundreds of millions. So yeah, these are the things that will bring, you can say, NFTs to the mainstream. When big platforms like Instagram are basically allowing folks to basically show their NFTs here and build a marketplace on Instagram. So then it goes into like 1 billion people's hands. So the decision likely spells a rush of new cultural visibility for NFTs. Instagram has over 1 billion, there we go, so that's the word. So Instagram has over 1 billion monthly active users, many of whom use the platform to promote and market their art. So yeah, so this is how adoption happens, guys. Like things like Instagram, things like Twitter, really integrate NFTs, and then from there you have utility, and then from there you have many other use cases that are built. So that's the adoption news there. Let's continue and look into what Google has in mind, right? So some good news came out of Google as well. So the thing reads here, Google Cloud forms Web3 team with blockchain focus. Guys, even Google is not keeping, this thing at bay. Like they want to bring in blockchain into their data structure. So it reads here, the division will primarily serve business customers looking to leverage blockchain. Google Cloud is reportedly constructing a Web3 team that will focus on providing blockchain services to enterprise. VP of Google Cloud Ahmed Zaveri confirmed details of the division's plan to CNBC, which reported the news today. The division previously announced details in January and has partnered with blockchain projects in recent years. So yeah, we are going to see adoption to Web3 come to Google, and they're building their teams here. so here is some more insight. So he goes here. Zaveri clarified in a statement to CNBC that the division is not trying to be part of the cryptocurrency wave directly. Instead, it is providing the companies with access to blockchain technology. In other words, the division will provide blockchain as a service to enterprise users, giving those users the ability to navigate blockchain data or run blockchain nodes. The services will be similar to those offered by big tech companies such as Alibaba, Amazon, and formerly Microsoft, the latter of which ended its Azure blockchain services last year. So yeah, Azure is something that we can really look into as well, because it offered blockchain support to many sort of SMEs. And now we're seeing Google sort of add that. So soon enough, if you were to like use any of the Google services for trends, for things, you could actually create commerce and be able to use a wallet to do your commerce, and actually build stacks of teams and stuff to build these applications for a real world use case. So yeah, so Google is taking that sort of step in building the Web3 team. So keep an eye on that. So this is the thing, guys. Like, whilst the markets are dipped as they are, there's these huge things happening, these huge adoptions happening. And then the next thing I want to kind of look into is Terra Luna, because Terra Luna has been buying the dip, guys. Right, so Terra, as we know, Terra actually had two sort of, so there's two articles I want to cover with Terra Luna. Let me just go to this one first. So you know, like they created their stable coin UST with a treasury of quite a few Bitcoin, right? They bought some Bitcoin, they bought some AVAX, and they pegged their stable coin on that, and we actually saw a dip in their price here. So the article here reads, Terra's ecosystem faces pressure on as stablecoins Depegs. Terra's USD stablecoin briefly lost its peg to the dollar early this morning due to the intensified selling pressure and borrowing demands, right? So the key takeaways here. Terra's UST lost its peg to the United States dollar again this weekend, dipping as low as 0.98, right, to the dollar. Depeg events come after a series of multi-million-dollar UST sell-offs. So yeah, right. So we're in a seller's market right now, guys. UST posted a slight recovery shortly after Terraform Labs CEO Do Kwon posted a tweet calling out the stablecoin critics. Right. So when things stabilized and it was pegged back to a dollar, Do Kwon went up and sort of tweeted. So Do Kwon's the founder of Terra. So yeah, so Terra had an issue with, especially with this dip that happened. And it sort of created a brief dip to 98 cents to the dollar on things. So whilst this was happening, Terra continued buying the dip, right? So let's read this here. So the article here reads, Terra beats Tesla as second largest corporate Bitcoin holder after $1.5 billion purchase. Let's continue reading. So yeah, so Terra's new hold more than, so currently Terra Luna LFG Foundation holds onto more more Bitcoin than Tesla itself right now. And I think soon enough they're gonna cross MicroStrategies as well. So this is quite big. This is really, really bullish. And I'm looking forward to this. I'm looking forward to all these things adopting and buying more of these dips. So we will read a little bit here. So it goes, Terra commitment to fill up its coffers with Bitcoin has been solidified once more with another $1.5 billion purchase. This is the fruit of a pledge that the project has made to buy more than $10 billion of Bitcoin to serve as a reserve for its stablecoin UST. Most importantly, though, is how this boosts the foundation's standing when it comes to corporations holding the digital asset. So Terra now holds more BTC than Tesla. Pretty awesome. Just give me 1 second, guys. Just give me 1 second. I'm just gonna just like zoom into this a little bit and give you guys a little, you can say, zoom into this. I want to read this a little bit deeper and basically look into this. So what's happening here with Terra, right? So Terra has been on a rampant buying spree, and they actually matched quite a few different, you can say, companies and corporations, just like Galaxy Digital, like Tesla, in buying these dips and actually using them for a big utility. Their stable coin is going to have the same utility when it's going to be pegged against Bitcoin. So yeah, so Terra has, you know, bought quite a bit of Bitcoin this week, and it holds more Bitcoin than Tesla. And one way is to basically companies BTC holding CoinGecko. This is something that you guys can check out, in fact. So if you go to this CoinGecko here, link here, public companies Bitcoin, you can kind of see who's been buying the dips, right? So as you can see, MicroStrategy right now is currently at, you can say, $4 billion worth of Bitcoin. Tesla, 1.5 billion. And they should really update this thing here, but I think by tonight this will update. But this gives you a list of companies that are buying these dips and buying a bunch of Bitcoin, and then have the biggest holding. So I'm gonna give you guys this link here in Cobra voice chat, so you guys can read that up. Do keep in track and keep track of these companies and their sort of movements. So that's the update on Terra Luna, guys. Like whilst even their stablecoin depegged against the dollar, they bought another $1.5 billion of Bitcoin. Now here's some cool news. So basically, Cardano is doing something similar with its upcoming stablecoin as well. So the article here reads, Cardano set to onboard game-changing algorithmic stablecoin rivaling Terra UST. Right, so they're going to be creating their own. So the concept of algorithmic stablecoin has recently created quite a buzz in the crypto space, with Terra's UST at the center of many chatters. It appears that the model has gained adherence amongst the crypto architects. So what is Cardano doing here? So Cardano and IOST prepare to launch algorithmic stablecoin. IOST has revealed that they will be taking a cue from Terra by launching algorithmic stablecoins backed by cryptocurrencies. The two blockchains join the likes of Terra and Tron in choosing not to back their cryptocurrencies with fiat services. Algorithmic stablecoins are cryptocurrencies whose value is pegged to a real-world commodity or fiat currency, but backed and stabilized by other cryptocurrencies. As in, you know, you create a treasury, and then you buy into things like Bitcoin and AVAX and stuff, and peg that against your stablecoin. So this new generation of stablecoins differ from collateralized stablecoins like Tether and USD. So the USD and Tether and USDC are basically pegged against the dollar, right? They're backed by fiat reserves. This, like the algorithmic stablecoins, are going to be something new. I think this will be our next sort of our economy. Our economy is going to be something like this. It's not going to be backed against the dollar. It's going to be backed against things like Bitcoin, things like, you know, like resourceful assets like AVAX, Solana. So the argument of this new model is that it creates a better decentralized system that eliminates the risk that comes with a stablecoin having a centralized issuer and operator. So this is something that we've kind of been reading about with USDT, for example. USDT has been in the news for you know, many things like printing and basically just giving the audience what they want, just more of these stables. But right now, as we can see, like USDT is still the highest peg cryptocurrency, as in it's third on the list, right? So 95 billion has been traded in the past. 95 million has been traded in the last you can say 24 hours. So you know, like this is where like sort of stable coins are going to be going. You're going to have like real treasuries, and you're going to have things like Cardano, like Terra Luna, create their stable coins, and they're not just going to be called stable coins, they're algorithmic stable coins. So let's read a little bit here. So it goes here: since embarking on its plan to back its Terra USD token with $10 billion in Bitcoin, Terra has seen its stablecoin grow in value, clinching the third spot amongst the most valuable stablecoin by market cap. Terra USD is now the 10th most valuable cryptocurrency by market cap, just behind its native token Luna, with a market cap of 18.78 billion. So yeah, creating an algorithmic stablecoin that's pegged against Bitcoin and other crypto assets is actually showing to be popular amongst the peers in sort of you can say Terra Luna, and now soon enough will be in Cardano. Cardano will have its own algorithmic stablecoin. So I'm pretty I'm looking forward to how they sort of create their treasury. How much Bitcoin do they buy? How much AVAX do they buy? How much of the dip do they buy? Do they follow Luna with the same sort of move? So yeah, guys, those are the kind of things that you guys should be excited about. Whilst we have these dips, that there's a lot of adoption going on, and I'm gonna sort of leave you guys with just one last sort of Reddit post into why you should be excited about layer 2, especially Polygon, right? So let me zoom into this a little bit. I can't zoom in. No. There we go. So the Reddit post here reads 7 reasons to be excited about Polygon in 2022. Let's go through these 7 posts. So Stripe, the global payment giant, is making its foray into Cryptoverse with Polygon soon. Stripe will allow business owners to pay using USDC. Plus, Twitter will be the first to use this. Imagine the possibility. So Stripe, as we know, as the big exchange that's been sort of going around Latin America and making big strides, is gonna be using layer 2, and you'll be able to use coins like USDC in your local shop, in your local sort of payment processors, which is pretty cool. So that's something to look forward to as sort of layer 2 Polygon comes to Stripe exchange. So now it reads underpinning blockchain in Lugano. So Lugano, we talked about the legal tender that it's taking towards cryptocurrencies. So Lugano is a city in they're trying to create the crypto city of Switzerland. So Lugano is it's a pro crypto city based in Switzerland, and has decided to let its stablecoin USDT and LVGA transactions on Polygon thanks to its low fees. The crypto friendly Swiss town recently made Bitcoin and crypto legal tender. Right, so things like this will happen more and more around the world. So investors love Polygon. Polygon has been massively funded in February, raised $450 million in funding led by Asians crypto investing from Sequoia Capitals, with participation with leading global investors including Animoca, 776, and Kevin O'Leary's, aka Mr. Wonderful. So we're having a real adoption happen here, right, guys? So as a red pilling Web 2.0 companies. Number 4, Polygon is onboarding Web 2.0 based companies into the decentralized world of Web 3, such as DraftKings. A NASDAQ listed sporting betting company has partnered with Polygon and has announced setting up a validator node to help decentralize its proof of stake network. So yeah, so DraftKings is sort of like fantasy league and sort of a betting company that's listed on the NASDAQ, and they've sort of brought on Polygon as their layer 2 solution. So that's gonna be pretty cool. Front-running play-to-earn games. Polygon Studios, the gaming metaverse arm of Polygon, is working at the forefront to bring gamify and metaverse to the masses. Guess who's heading it? Ryan White's ex-head of gaming at YouTube, to build out the gaming division at Polygon. Right, so we're seeing Supernet Chain, Hermes, Nightfall, and sort of these takeovers of these test nets. Like there's a lot to look forward to in cryptocurrencies. Like we're just at the start. Like believe it, like it's like the late 90s of the early .com days, and that's where cryptocurrencies currently is when it comes to adoption. So always keep an eye on sort of folks like Lark Davis and Altcoin Daily, and see and see what their viewpoint is when it comes to holding and what to be sort of excited about, especially when you have bearish movements like this on Bitcoin, on Ethereum, right? Ethereum's down to 2,200. ADA's down to 64 cents, right? So Polkadot is down to $11. These are the times where newbies are able to buy these amazing prices. We've never had prices like these, guys. Like Solana down to $66. So yeah, do leverage and buy these dips, guys. Like this is where we go. Dollar cost average into these tokens if you haven't already. But yeah, that's it for me. I hope you guys learned something and basically found a reason to hodl your bags. Thank you guys.